Good day, friends. In the subject of personal financial planning, a financial planner or an individual should know that what are the different avenues, investment avenues available for that person, and what are the pros and cons, means what are the benefits and what are the problems that are associated with investing in that asset class. And each of the asset class has its own benefits and has its own drawbacks or weaknesses. Where to invest? It should be as per your financial goals. Most of us, when we talk of financial planning, what we do is that we keep on investing the money for our future, but we are not very clear what our goals are. So in this lecture series on personal financial planning, upcoming time of times, I have said that before making any investment, one should have its own financial goals, and depending on your financial goals, you decide in which asset class you want to invest. Depending on your objective, you will decide that which asset class is suitable for you. There are a whole host of investment avenues or asset classes which are available for investment. Many of them we have already discussed. We have talked about equity shares for quite long. We have talked about debentures. We have talked about bonds. We have talked about fixed income savings. We have talked about the different other investments like arts and all those things. So in this lecture, my focus will be on gold investment. As you are aware, India traditionally, and when we talk of the India investing in gold, the very first thing which comes in our mind is the Indian homemakers, Indian housewives we call it, or Indian women. It is being considered that culturally the gold has been the first love as far as the investment is concerned of Indian women in India. Traditionally, Indian women used to buy lot of gold, keeps it in form of jewelry, keeps it in another physical form, and they have created big asset, or I would say good amount of asset, good quantum of asset depending on the income class of that person in form of gold. And over a period of time, it has been observed that gold has given good return, gold has given reasonable returns, right? So that's why we can say Indian women, Indian housemakers, Indian housewives are quite smart. In time of emergency, even in the recent past, when the pandemic 2019 corona, in form of corona, came to the world, right? It was the gold which was at the rescue of those individuals who lost their jobs, who were not having incomes, who were not having their business, or they were not able to earn. At that point of time, gold used to be the good asset that proved to be good asset class. So what I am trying to say, that traditionally in India, gold is being considered as a good investment, and gold has been one of the favorite investment in India traditionally. So gold investment in India holds sentimental value and has been used as a currency for years before paper money came into existence. This point tells you that this means before the advent of even paper money means rupee, right? So before the advent of the paper money, this was used to be as a medium of exchange. What is the role of the currency? What is the role of the money? Basically, money is a medium of exchange. And before the paper money came into existence, even the gold was being considered as a money. It used to be considered as a medium of exchange. So it's like a currency. So gold has been a symbol of wealth since older times, and even in the information age, means you can say in the present age, has managed to maintain its relevance as an investment. What this point tells you, that traditionally that this gold investment or gold is being considered as a good wealth. It is being considered as a symbol of wealth, and even today it has not lost its relevance. And it is a different investment classes, these asset classes in which we invest, but gold still in India is being considered as an important asset class to invest. So investing in gold enhances the diversity of the portfolio and promises long-term wealth preservation. Means we always recommend, and everybody, every financial planner, you as a financial planner, not only for your own purpose, even you can be a financial advisor also. So as a financial advisor, you should always suggest to your people who come to you for your advice that one should create a bouquet. And when I say one should create a bouquet, means diversified portfolio. And when you talk of the diversified portfolio, means you have a different asset classes that must be there as a form of investment with you. It may be in form of fixed income securities, it may be bank deposit, it may be PPF, it may be post office deposit, it may be equity shares, it may be debt, it may be real estate, it may be gold, it may be art. Like that, these are the various asset classes in which investors do invest, right, for their future, for their financial goals. So, means if you want to create a diversity, and if you ask me as a general rule, depending on time to time, depending on income, again depending on your financial goal, because no figure is applicable to everybody. If I say you invest 20% of your total investment in gold, it is not a correct version, because depending on your requirement, depending on your financial goal. But as a general rule, normally people say, financial planners, advisors, that 10% of your total investment should be in the form of gold, right? When you talk of the gold, again I am saying, suppose a person has just started making income and there is a very limited income. So small savings, when the person starts making the small saving of say 2,000, 3,000, 5,000 rupees, preferably normally people do invest in the fixed deposit first with the bank. And once they accumulate a little bit of money, means deposits, then they go for the other form of investment. But as a general financial planner, I would say that the 10% of the portfolio should be there in the form of gold. So now the question is, why to invest in gold? In this discussion also, I referred that why the gold is important. So the primary reason for investing gold is portfolio diversification. The point we just discussed, portfolio diversification, means that in your portfolio of investments, when I say portfolio of investment, means I am referring to the different investments that you are making. You must diversify. That is, you invest in different asset classes. It is equity, debt, fixed deposit, which I referred just now. It is considered to be an ideal hedge against the potential volatility of equity investment as well as inflation. Friends, this is very, very important point, that the gold is always being considered as hedge against inflation. When the inflation goes up, normally the gold prices also goes up, right? And whenever there is a volatility in equity shares, means ups and downs, the volatility is very high. At that point of time, gold is being considered as a consistent return giver investment class. So we say that it is a hedge against potential volatility of equity investment as well as inflation, right? So because the fluctuations in the price of the gold is not as much as it is the case on equity, because the equity gives you the variable return, unlike the fixed deposit, unlike the post office deposit, PPF deposit, which gives a fixed return. Equity also gives you a very variable return. So there is a lot of volatility, because that's why we say equity is a risky investment. So we say that at times, in times of volatility in the equity market, it is a good hedge, right? So it means it protects your investment values. So it protects not only the volatility of equity, it also protects against the inflation, right? So gold is extremely liquid and offers investment an option to trade it during an emergency or when they need cash. When I start this lecture on the investment in gold, I said traditionally in India, before the advent of paper money, the gold is being considered as a money. Gold was used to be considered as a medium of exchange. And this is relevant even today. I will not say exactly it has replaced or it is as good as the paper money is, but I would say it is quite liquid. What is liquid asset? Liquid asset means how easily an asset can be converted into cash. And there are various ways in which I'll be talking in this very lecture, that you can invest gold. Not only you can invest gold in physical form, there are various other ways I'll be talking in this lecture itself, right? So whenever you want to convert it into money form, at any point of time, you can sell it in the market as per the market rate. So that's why we say it is quite liquid, and whenever you need cash, in emergency, that you can convert this asset into cash very easily. Gold investment in India can protect investment from currency devaluation. We are talking of that why you should invest in gold and what are the benefits of investing in gold. So say, I said, it is hedge against inflation. It is an investment which is hedge against the equity volatility or volatility in the equity market. Similarly, at the time when the currency value devalued, when the devaluation takes place, means devaluation is a process where intentionally the government, any government reduces the value of its own currency. Right? There is a difference between currency depreciation and currency devaluation. Devaluation is a process where intentionally government decreases the value of its currency vis-a-vis the other currency, right? But depreciation means we say exchange rate between the rupee and the dollar. On a day-to-day market, on a day-to-day basis, the value fluctuates. If the dollar is rising and the value of Indian rupee is decreasing, I would say rupee currency is depreciating. So at the time of devaluation of the currency, it is being considered as a good investment because it protects the decrease in the value of the currency. That if you have invested in the gold, the value of your gold will increase. So the different option to invest in gold gives investor a flexible and ease of owning gold. Right? Nowadays, no longer people can invest only traditionally. People used to invest gold in physical form. But nowadays, there are many other options which I will be talking in this lecture in which you can invest in gold. Right? So for this reason, there is a flexibility and ease of owning gold. Regardless of the situation of the market, gold has always seen a rise in Indian market and always has given good return, bought returns. Bought returns means if you buy the gold at a point of time, see, I'm not talking of year-on-year fluctuations in the price of gold. But when you are talking over a period of time, if you take the period of 5 years, 8 years, 10 years, it has always been observed that gold has given you reasonable return. Means 10, 11% return, reasonable returns, 12% return, right? It has always given over a period of time. See, there has been, I'm not showing you the chart, that will take a lot of time, but just I'm telling you that over a period of time, if you take 5 years or 10-year average period of holding, then it has given you the return of more than 10% annually compounded. I'm not saying 10% return from the purchase price and the sale price. I'm saying annual return. Right? So annual compounded return is more than 10% if you hold the gold for more than 5 years or more than 7 years. Average I am saying. So now the question is, after talking of why to invest gold, I would say how to invest gold. Means if I want to invest in gold, what is the method of investing in gold? So there are some conventional and modern types of gold investment preferred by people. Right? So in convention, when you talk of investment in gold, the very first thing that comes in our mind is go to the bullion market, buy some gold, or buy some jewelry. Like what I said in the beginning of this lecture, that Indian women are very smart, homemakers are very smart, and traditionally they have been holding the gold. They buy the jewelry, they buy the gold, right, and keep it for a very longer period of time. And over a period of time, the value of their jewelry increases. So it means they have created good amount of wealth over a period of time. So every year, if out of your income, some part of your income, you do buy some gold. So whenever we are talking of investing in gold, first thing that comes in our mind is physical gold. That you go to the market, buy some jewelry, buy bullions. I mean, there is a difference between jewelry and the bullion. Bullion means gold biscuits, gold bars, 1 kg of gold, 10 grams of gold, 20 grams of gold, right? So this is called bullion. So there is no making charges, there is nothing involved. You just buy a small piece of gold, right? Raw, I'm not raw, I would say gold, depending on the purity. So it is a conventional and modern type of gold investment preferred by people. In conventional form, it was just buying physical gold, which I was just referring, in the form of jewelry, coins, bullions, or artifacts. Artifacts means you might have seen, if you go to any palace in India, there are good paintings where the gold plated decoration is being made. That is called artifacts. That values lakhs and lakhs of rupees, even crores of rupees, I can say these days, right? So you can buy gold in form of jewelry, coins, bullions, or artifacts. the scenario has changed nowadays, and the investor have more option to invest, such as gold ETF and gold funds. What I'm saying is that traditionally when the gold investment comes, normally the picture that comes in our mind is go to the market, buy some jewelry or buy some gold coins, right? You go to the jeweler, tell him or tell her that I want to buy 10 grams, 20 grams, 30 grams of worth of, not worth, means 20 grams of coins. So a coin will be given to you and you will pay the price of that coin. 20-gram coin, if I'm presuming 60,000 rupees is the per 10-gram rate, so 1,20,000 rupees you will be paying and buying a coin of plus small charges, we call it spread, and then you pay the amount, right? So this has been the picture traditionally that when we talk of the purchase of gold. But nowadays, not only physical gold, because buying physical gold has its own problem. I'll be discussing it, right? So what the options you have is you can go for gold ETF, you can go for gold funds, you can go for digital gold, you can go for the sovereign gold. But it means there are a whole host of investment avenues within the gold. That is, there are different forms in which you can invest in gold. So these are the forms in which you can invest in gold. Physical gold, which I was just offering means in form of coins, in form of jewelry, in form of biscuit, in form of bullion, right? In form of artifacts. Gold ETF, I'll be discussing in detail. Exchange traded fund means gold ETFs, we call it. Gold mutual fund, sovereign gold bond, and digital gold bond. So these five are the broad forms in which you can buy gold. And I'll be discussing and I'll be also talking about the merits and demerits of each forms of gold investments. First, you talk of physical gold, which all of us traditionally know, right? I have said earlier also that physical gold can be held in the form of jewelry, coins, bars, bullions, etc. Right? I hope the word bullion is clear to you. Bullion means, it's like a biscuit, it's like a, what do you call? If somebody wants to buy 100 grams of gold, right? You don't want to buy jewelry. You go to you buy a biscuit of 100 grams. It is pure, say 24 karat gold, right? So because when you transfer it into jewelry, if you make jewelry in 24 karat gold, it's difficult. The strength doesn't come out of it. So what you can do, instead of buying jewelry, you can buy a biscuit of 100 grams or 20 grams like that. That is called bullion. However, there are few limitations of investing in physical gold. Making, designing charges makes purchase expensive. Friends, this is very, very important. That, as I have been telling many times in this lecture, that you can buy gold, or traditionally in India, people do buy gold in physical form. But when you buy gold in physical form, especially in the form of jewelry, shopkeeper, when you design it, when you make it, they charge making charges, and they are normally from 5% to 20% of the making charge of the gold plus the making charge is being charged, right? So, and when you dispose it off, when you sell it, then those whole making charges, because that is basically for consumption purpose, personal use purposes. But if you're buying this jewelry for a wealth creation purpose, then the making charges or designing charges which you have paid at the time of purchase will go waste when you will sell it, because the shopkeeper at the point of sale will give you the value of gold only. They will not give you the value of the jewelry, means the making charges which you have paid. Plus, apart from this limitation, storage expenses are applicable due to security and insurance requirement. I buy the gold, and what normally households do, they keep this gold in their lockers. So locker are not free of cost. Each bank charges some locker charges for it. So it means there is some security charges. Or you may, because when you have a locker in a bank, not only the locker charges is being charged by the bank, but also each of the locker that the bank provides to you is being insured, right? And these insurance charges will be charged from the customer itself, means from you. So there is a storage expenses, there is the insurance expenses involved in buying the physical gold. Apart from the buying time, even at the point of selling, when you will sell it, selling is inconvenient due to possible impurities and the requirement of origination and purity certificates. Of late, I'll be talking that later. Of late, Government of India has made it mandatory that when you will sell the jewelry, right, there is a hallmark requirement, right? There is a 6-digit code that is applicable. It's a compulsory on sale of old jewelry. But traditionally, no such hallmark requirement was there. So the question of impurities come. You buy jewelry, you buy coin, but you are paying the price of 24 karat gold, which is considered to be 100% purity of gold. But the goldsmith might have given you of 23 karat purity. And a common man, a common investor, a common individual doesn't have a foolproof measure by which it can measure the purity of the gold. So you are dependent on the shopkeeper, who is the bullion merchant, right? You are dependent on the jeweler who is selling you the jewelry. So when you sell it, you buy the jewelry under the impression that it is a 23 karat gold made jewelry. But at the time of selling, the person to whom you are going to sell, he may say or she may say that it is the purity is of 22 karat, and price of 22 karat purity is less as compared to 23 karat purity. The highest purity factor is 24 karat, right? So if you are selling gold and at the time of selling, the question is, means there can be possible impurities. I am not saying it is always there, but there are possibilities, right? So the impurities and origination and purity certificates are required. So overcome the limitation of physical gold means this is the normal problem. And one more thing, when you buy physical gold, the applicable GST is applicable on it. Means whatever the GST rate that is applicable in jewelry and the physical gold, that you have to pay. Supposing the sale, the current price of gold is say 61,000 rupees per 10 gram. So when I buy the 10 gram of gold, not only I have to make payment of 61,000 rupees plus 2% additional GST. Means whatever the GST rate applicable at that point of time when you are buying or you are selling, that will be also applicable. So if you are buying, you have to pay not only 61,000 rupees, which is the current rate of the gold of 10 gram, but you have to also pay the GST. So that is additional cost involved when you buy the gold, when you keep the gold in the physical form. So to overcome the limitation of physical gold, investor can opt for digital route, which includes investment such as digital gold, gold ETFs, gold mutual funds and sovereign gold bonds. Friends, these days if you are buying the gold for investment purposes, I would say these are the right methods. Instead of buying physical gold, as a smart investor, as a smart financial planner, you should not buy the physical gold. See, buying jewelry is something different, that you buy for your own satisfaction, that you buy for your beautification purpose or whatever the purpose is. Means the way you buy the dress, similarly you buy the jewelry also. And in India, by and large, people have a love for the jewelry, right? So but when you making it for an investment purpose, then I would say gold ETFs, gold mutual funds, sovereign gold bonds are the better option. So to check the purity of gold from June 6, 2021, I was saying at one point of time that purity is an issue when you sell it. So to check the gold from June 2021, hallmarking has been made compulsory. Government of India has made the hallmarking compulsory on the sale of jewelry in the physical form and the sale of gold in the physical form. Apart from this, from April 1, 2023, gold jewelry can not be sold without having 6-digit HUID number. So it's a special number that you call it HUID number on each jewelry. Means what is this HUID number? This shows the purity of the gold. This where I say hallmarking. What is hallmarking? Means whether the gold is of 22 karat, 23 karat, 24 karat. What is the purity and what is the level of impurity? I would say what is the level of purity that is being shown in this 6-digit HUID. Like say for example, if you are going to buy a jewelry which is having some diamonds. So while you buy the jewelry in form of means which is having diamonds, so normally the diamonds are being connected in 18 karat or 20 karat, not 24 karat or 23 karat, normally 18 karat. So the shopkeeper will charge only the rates of 18 or 20 karat rate. So that will be mentioned through, that will be proof, the purity of it will be proved by 6-digit HUID number. That is a symbol of the, nowadays it is made compulsory so that there is no cheating that can take place. After talking of investment in gold in the physical form, let me refer about the ETFs. A very important method of investing, and I would advise all of you that who are listening to this program, that if you are making investment, and basically when we are talking of financial planning, we have in our back of mind that we are talking of investment. For achieving our financial goals, for reaching our goals, that whenever we need the money, we can dispose it off. So ETFs are the good options of investing in gold. The way the shares in the exchanges, the ETFs are there for equity. ETFs are there for different types of equity. You have Nifty ETF, you have Sensex ETF. Similarly, there are gold ETFs also, right? So as far as the gold ETFs are concerned, the way the ETF, what is ETF? ETFs are basically a combination of various type of asset classes that you create. Here, when you are talking of gold ETFs, you are talking of only gold, right? So exchange traded gold ETFs, I mean exchange traded funds, is similar to buying physical gold, but the only difference is investors do not actually buy the physical gold. You don't have to buy it, right? The way I was talking in the previous point, that you can buy, you can invest in physical gold, you can buy jewelry, coins, bullions, articrafts. But here, you don't buy any physical thing, you just buy gold ETF, means which is traded on the stock exchanges. It's like security, right? So it will be automatically whatever the amount of gold investment you make, it will go in your depository account. So gold ETFs are the mutual funds that tracks the domestic prices of physical gold, means how the value will increase as the price of underlying asset is gold. So if the price of gold will increase, the value of your ETF will also increase. If the price of gold decreases, the value of your ETF will also decrease. So gold ETFs are like mutual funds that track the domestic price of physical gold. The fund management company uses the investment to buy the gold bullion. As gold ETFs are listed and traded in the stock exchanges, investing in gold ETF is safe and tightly governed, right? So unlike the physical gold, where there are question of purity, there are question of GST, there is a question of, when you selling cost, buying cost. Here, only in the ETF, there is no such question of impurity, there is no such question of GST, because when you buy gold ETFs, there is no GST that is applicable on the purchase of the gold ETF, right? So only thing is you have to pay a small commission to your brokers, registered brokers, who will be dealing on your behalf through stock exchanges, like whether it is BSE or it is NSE. So you can buy anytime you want to sell it at the point of the market, means in India the stock exchanges are open from 9:15 to 3:30, right? So in between that time you can sell this gold, right? So the minimum investment in 1 unit of gold ETF means how much you can invest. You can buy even 1 unit of ETF, which represents the price of 1 gram of physical gold. So if I am presuming that gold price is 61,000 rupees per 10 gram, normally the price of gold is being shown in terms of per 10 gram. So I'll say you can invest 6,100 rupees worth of ETF and you buy 1 gram of gold. Since these are listed in the gold ETFs, is a highly liquid and can be traded at any point of time in the stock market, right? So this is, friends, about your gold ETF. So we have talked about 2 forms of gold investment. One is physical gold, other is gold ETFs. So I'll be continuing my lecture on investing in gold in my next lecture, where I'll be talking about the investing in golds, means there are different forms of investing in golds, how the tax implication of different forms of investment takes place. In this lecture, we have talked about physical gold, we have talked about the gold ETFs. Thank you very much.